Alright, let's unlock the world of index funds. If you're a finance student, you've probably heard the term tossed around in lectures or on the news. But what exactly is an index fund? In simple terms, an index fund is a type of investment fund that aims to mirror the performance of a specific market index, like the S&P 500 or the NASDAQ. Instead of trying to pick winning stocks, you're basically buying a slice of the entire market. It's like getting an all-access pass to the financial roller coaster, but with less guesswork and generally lower fees. Now let's break down the top 10 categories of index funds you need to know. First up, equity index funds. These track stock market indices like the S&P 500 or the Dow Jones. Second, bond index funds. They follow indices made up of government or corporate bonds. Third, international index funds. These give you exposure to markets outside your home country. Fourth, sector index funds. Want tech? Healthcare. These funds zero in on specific industries. Fifth, small cap index funds. They focus on smaller companies, more risk, but also more potential reward. Sixth, mid-cap index funds. They cover companies that are not too big, not too small, right in the middle. Seventh, large cap index funds. These focus on the giants, the Apples and Amazons of the world. Eighth, total market index funds. Think of this as buying shares in the entire stock market. Ninth, specialty index funds. These might track things like real estate or commodities. And finally, 10th, ESG index funds. These focus on companies with strong environmental, social, and governance practices. So, next time someone mentions index funds, you'll know they're not all the same. There's a whole world of options out there. Dive in, do your research, and you'll be way ahead of the game.